Hello friends, hope you are all doing well. How have you all been feeling these past couple of days? Has it been like riding a roller coaster, up and down? Just as we watched silver shoot past $93 like a rocket a few days ago, and everyone was just about to pop the champagne to celebrate, thinking our retirement funds were about to double this time, the market suddenly did a U-turn and brutally crashed to $86. Is this the end of the trend? Or is it a trick by the big players to deliberately shake us retail investors off the bus? Everyone, please pay attention. You absolutely must pay attention. The 28th of January is a very critical date. It might decide whether the silver in your hands will increase or decrease next month. An epic storm is brewing behind the scenes. In today's episode, we're not talking fluff. We are definitely going to thoroughly explain the secret behind this. The legendary short squeeze script. If you don't want to get reaped in the upcoming market moves, you must watch this video to the very end. These past few days, Aya, what on earth is going on with this silver? Just the other day I saw it rising so fiercely. I was feeling so pleased, thinking my hedge against inflation was secure this time. How come I wake up after a night's sleep, and that price is just like a slide, dropping so much it is making me panic? Should I sell off the ETF I'm holding for now? Actually, completely understand how everyone feels. The nest egg we've worked hard for most of our lives to save, every single cent is, but, you know, the market just loves to mess with people, which is what we often call Mr. Market having a weird temper. In the early morning of the 17th, just when everyone was sound asleep, the market suddenly turned on a dime, and prices plunged all the way down, hitting a low of $86.6. This round trip resulted in a drop of over 6%. What does 6% mean? If you invested 1 million, you might wake up from a nap to find 60,000 less in your account. If you are one of those friends who saw the rapid rise and couldn't resist chasing the high, you are definitely not feeling great these days, and might have even lost your appetite. So today, whether you are a veteran who already holds silver, or a new friend planning to buy some silver ETF to fight inflation, everyone is asking the same question. Does this sharp drop mean it can't rise anymore? Is this nosedive a trend reversal? Have the main players bailed? Next week, will silver rebound, or will it continue to fall? Don't rush. Don't panic. Panic comes from not understanding the truth. Today, I'll use the most plain, most common language combined with the latest news to help everyone sort this out properly. We won't talk about those incomprehensible technical terms. We won't discuss things like Elliott wave theory or Fibonacci coefficients. We'll just speak the plain truth that US common folks can understand and lay out the underlying logic of this market for everyone to see. First, I want everyone to take out your calendars or your phone's calendar and circle the 28th of January heavily with a red pen. Why? Because this day is the final delivery day for COMEX silver futures. These words sound very professional, but what do they mean? What does this have to do with us? I'll give you the simplest analogy, and I guarantee you'll get it as soon as you hear it. Imagine there is a huge bakery. This bakery does great business and has a pretty good reputation. It has sold a lot of bread pickup vouchers. Normally, when people buy these vouchers, it is not because they actually want to lug hundreds of pounds of bread home for their meals. Who has a bread pantry that big at home, right? People just think the price of bread will go up. So they hold the vouchers to buy low, sell high, and make a profit on the difference. So as long as the vouchers haven't expired, people just trade these pieces of paper back and forth, and the bakery owner is happy and relaxed. Whether or not there is actually that much bread in the warehouse, nobody really cares on a day-to-day basis. As long as no one comes to collect the bread, this game can keep going. But the so-called final delivery day is the redemption deadline for these pickup vouchers. This means that when this day arrives, if you are still holding a voucher and haven't sold it, it means you truly want those hundreds of pounds of bread, and the bakery owner has to bring out the real bread for you. At this point, if the owner has no bread in the warehouse, then there is a huge problem. The silver market right now is facing this same awkward situation of having no silver to deliver. This is the biggest risk we're about to face next week, and also the biggest opportunity. According to the most accurate data we have on hand, the contracts currently on the market that haven't been closed out, which are basically the pickup vouchers in everyone's hands, amount to about 590 million ounces. This is an astronomical number, 590 million ounces of silver. If you piled it all up, that would be a mountain of silver. But let's look back at the exchange's warehouses. The actual certified physical silver inventory available for delivery is less than 50 million ounces. My dear family and friends, you do the math. A demand of 590 million against an inventory of less than 50 million. How big is the gap in between? This is like a bakery issuing 100 pickup vouchers, but ending up with less than 7 bags of bread in the warehouse. So what about the remaining 93 people who can't get their bread at this point? Wouldn't the bakery owner be as anxious as an ant on a hot pan? This is what is often called a squeeze in financial circles. And we also often call it a short squeeze or cornering. In this situation, those people who were bearish on silver before, who thought the price of silver would fall, are now under incredible pressure. As the 28th of January gets closer and closer, they face two painful choices. First, cut losses and get out. Hurry to the market, no matter how high the price is, buy back silver at a high price to fill that hole and deliver the goods. Second, close the position and surrender. Hurry and close out the short contracts they're holding, admitting they bet on the wrong direction. These two choices, no matter which one, will turn into a powerful buying force. This pressure of having to buy is like a group of people scrambling to cross a single plank bridge, and it will very likely push the price up again in the short term. Because there is only so much bread, but so many people who want it, how could the price possibly drop too deep? So, next week's market trend, to a large extent, is just a continuation of this war for bread. This is also why we've seen the price drop these past 2 days, but it hasn't crashed, because there is a strong force underneath propping it up. That is the people who are anxious to buy goods lining up. This is what we often say, the fundamental support is still there. The big players also know this clearly, so this drop in the past few days is very likely just them shaking out the market, washing out the retail investors who lack confidence, so they can take over at a low price, waiting for next week's short squeeze. Everyone, think about it. If you were that bakery owner and knew there wouldn't be enough bread next week, wouldn't you hurry up and secretly buy some now while the bread price is down? This is why we can't just look at the surface level ups and downs. We have to look at the logic behind it. After talking about that bread snatching settlement day, we have to look a bit further and see the bigger picture outside. Everyone knows this world has been really unpeaceful lately, especially over in the Middle East. The situation is really changing by the day. It is dizzying to watch. The US has recently increased the force of its sanctions on certain countries and even sent more aircraft carriers over. Although a large-scale conflict hasn't broken out for now, you can feel that tense, on the brink atmosphere just from watching the news. This is like a room full of gas. Although it hasn't caught fire yet, all it takes is one small spark, and it could detonate at any moment. Also, we have to be aware that the political situation over in the US is also unsettled. Although the new team hasn't officially made a move yet, the signals they're putting out are very tough. And sometimes there are even some unexpected moves. This kind of uncertainty is a disaster for people doing regular business, because you don't know what will happen tomorrow. But for gold and silver, this is precisely when they come into play. We often say, antiques in prosperous times, gold in chaotic times. In fact, silver, as the poor man's gold, has the same safe haven function, and sometimes its explosive potential is even stronger. When people worry about the paper money in their hands devaluing because of war, or worry about unstable situations affecting the economy, smart money will naturally flow to these precious metals that you can see and touch, which have been recognized worldwide for thousands of years. This is a sense of security that is etched into our bones. If you think back to that time in 2020, as soon as the situation got tense, Silver could jump 15% in a single week. This high intensity of uncertainty right now is like a sword hanging over our heads, which could at any moment stimulate funds to flood into the silver market for safety, as long as there is still news coming out of the Middle East. As long as the geopolitical alarms haven't been called off, silver has a solid support base. It is hard for it to have a deep drop because as soon as it falls, safe haven funds will rush in to buy the dip. This is also why I always stress that you shouldn't panic over a 1 or 2 day drop. We have to look at the overall trend in these turbulent times. Allocating some assets to precious metals is like buying an insurance policy for your wealth. This insurance isn't for making a fortune, but to ensure that in extreme situations, we still have hard currency on hand. Know that we're done talking about safe havens. Let's talk about a more tangible and long-term support point, and that is demand. Many friends might think that buying silver is just to wait for its price to go up and make a profit, just like buying stocks. Actually, silver and gold have a fundamental difference. Most gold is used to make jewelry or made into gold bars and stored in bank vaults. It is not really consumed. You can pass it down to your grandkids and it'll still be there. But silver is different. Silver is the real deal industrial blood. It gets used up, consumed, use a little, and there is a little less. What are the hottest, most popular industries globally right now? Everyone, think about it. Is it solar power generation? Is it electric vehicles? Is it AI, artificial intelligence? Let me tell you, these 3 driving forces of the future, every single one of them can't do without silver. Why is that? Because silver is the most conductive metal, bar none. So, those silvery, white lines on solar panels, that is conductive paste. As the whole world is promoting green energy and working on carbon neutrality, aren't there more and more solar panels on rooftops? Every single one of these panels is consuming silver. According to estimates from professional institutions, by 2026, the solar sector alone will eat up several thousand tons of silver. And now, solar panel technology is upgrading. The new generation of N-type cell technology has higher power generation efficiency, but uses even more silver than before. This is demand upgrading. Also, the increasing number of electric vehicles on our roads. Now, the electronic components and battery connections inside them all require silver. Add to that the currently hottest AI data centers, those high-performance servers, in order to ensure instruction cycles and heat dissipation, are also huge consumers of silver. This creates a very interesting, and for the bulls, very exciting situation. On one side is the supply side. Mine production can't keep up. Mining silver is not only hard work, but also subject to environmental restrictions. Many mines are aging, and the increase in output is very slow. China has even placed controls on silver exports. On the other side is the demand side. These emerging technologies are desperately consuming silver. This supply-demand gap, like the foundation of a building, is firmly propping up the price of silver. So even if the price fluctuates in the short term, even if it shakes a bit next week because of the delivery date, in the long run, as long as people on Earth still need to use solar energy and drive electric cars, silver doesn't have to worry about not being wanted. This is a rigid demand. This is also why I've always been telling you all, you have to have a long-term perspective when investing. Don't be scared off by the rises and falls of a day or two. What we're buying is, of course, we have to report the bad news along with the good. I can't just talk about the nice sounding stuff. When we invest, the thing we fear most is blind optimism. Since the fundamentals are so good, why has it still been falling these past few days? What other risks are there for next week? Everyone must really listen to these points. This is your life-saving talisman for surviving in the market. The first risk comes from the exchange's rules of the game having changed. Just a short while ago, the CME, seeing that silver was rising too fiercely, suddenly announced an adjustment to how silver futures margins are calculated. Simply put, if you want to play with silver futures, now the entry ticket has gotten more expensive and you have to prepare more capital. Before, you might have been able to play one contract with just tens of thousands, but now you need more money. For those who borrow money to speculate and use very high leverage, the pressure is immense. If they can't come up with the additional funds, they could be forcibly liquidated, which would then lead to drastic price fluctuations. This is like a casino suddenly raising the entry fee. The second risk is the attitude of the US Federal Reserve. Fed. Everyone knows the Fed is America's central bank. It controls the US dollar's interest rate. Although the inflation data looks pretty mild, and the job market is also okay, the Fed official speeches are still ambiguous. They like to play Tai Chi. One moment they say they might cut rates. The next they say it won't be that soon. This kind of attitude will make the US dollar index go up and down. Everyone should remember a rule of thumb. The US dollar and silver are usually a seesaw. When the dollar is strong, silver is weak. When the dollar is weak, silver is strong. If next week Fed officials come out again with hawkish remarks, saying they're not in a hurry to cut rates, then the dollar might rebound and silver will be under pressure. So next week, everyone should pay a little attention to those official speeches, as this might bring short-term fluctuations. The third risk is the selling pressure from profit-taking. After all, silver has already risen a lot from its low point. Many big players who bought in early are now making a killing. It is human nature to want to secure profits. When they see it is no longer rising, if there is any sign of trouble next week, these big players might choose to sell a portion first, just to put the money in their pockets and feel at ease. This kind of selling pressure will also cause a price correction. It is like when we go to the vegetable market. If vegetable prices get too high, people might buy a little less, and the price will naturally fall back a bit. This is a normal market adjustment. After all this analysis, we must ultimately get down to what we should do. Just listening without practicing is useless. For the family members of our channel with different styles, I'll give the following few suggestions. You all can take some notes and use them as a reference. The first type, for my conservative friends, watch more, act less, build your... Although the current price has corrected, it is still at a relatively high point historically. If you don't have any silver yet, definitely don't go all in with your pension at once just because you are afraid of missing out. The risk is too great. You can set a psychological price point. For example, if the price returns to around $85 and stabilizes, stops falling, then consider getting in with a small amount. Don't be in a rush to buy your full position all at once. You can split it into 3 or 5 portions and buy slowly. If you already hold a position, to all my newbie friends, if you think futures are too complicated and stuff like delivery and margin makes your head spin, then I suggest you can look into silver ETFs. The good thing about an ETF is that it is simple. You don't have to worry about delivery dates or getting margin calls. Buying and selling is pretty convenient, just like buying stocks. Plus, it follows the price of silver, so it is more suitable for us regular folks to do mid to long-term allocation. Even if you just buy a little bit each month, it can be quite substantial in the long run. Finally, I am going to put together a few key dates for next week that you must pay attention to. You can all mark them on your calendars. Though on the 22nd of January, Fed officials will be speaking. We need to hear their views on interest rates. This will affect the US dollar's trend total. The 25th of January, the US will release GDP data. This reflects how well the US economy is doing and will also affect gold and silver prices. The 28th of January, this is the COMEX Silver Futures final delivery day that we were talking about. This is the top priority. The market action on that day could be very exciting. These events and data can all cause major fluctuations in silver prices. We advise everyone to prepare a response plan in advance. If you have a plan in mind, You won't. All in all, next week's silver market is destined to be a turbulent week. The 28th of January delivery date is like a huge whirlpool that will suck in all sorts of long and short forces. But when we invest, we are cultivating our mindset. Market ups and downs are normal, and as long as we understand the logic behind it, that huge supply-demand gap, that turbulent international situation, that expectation of loose monetary policy, we can be well aware and have a plan in hand. Don't be scared by short-term K-lines, and don't let momentary greed cloud your judgment. Our goal is to make life better, to make our retirement life more dignified, not to make life more frustrating. I will always be here with everyone, helping everyone keep a close eye on every key market signal, acting as your crutch and eyes on your investment journey. All right, that is all for today. If you feel that today's in-depth analysis has helped you see through the fog of the market and has set your mind at ease, please don't forget to give me a like. That would be the greatest encouragement for me. Also, please subscribe to our channel and share this video with your friends around you who are also worried about their retirement funds. We will continue to be here, acting as a lighthouse on your path to wealth, helping you watch over every storm and surge. No matter how the world changes, I hope everyone can eat well, sleep well, and be able to laugh. I am your old friend. See you in the next video, wishing everyone peace and safety.